Welcome to Everyday Economics, a podcast that helps you learn about the economic world happening around you every day. I'm your host, Chris Krug, president of the 501c3 nonprofit, nonpartisan Franklin News Foundation. Everyday Economics is a production of America's Talking Network. You can check out all of our great podcasts at americastalking.com. To support Everyday Economics and podcasts such as this one, please make your tax-deductible charitable contribution by clicking the link in the show description. We are recording today's episode on Monday, July 24th. Joining me as always is Dr. Orphe Divounguy, PhD economist. Dr. O, we've talked quite a bit about the gap in housing in the United States, and you've estimated before several times that we might be as many as 2 million housing units short.
4.3 million. How crazy
Perhaps
is that?
you've squared the number since the last time we talked about it, but regardless, there's a huge gap there. Let's go with yours. 4.3 million short of places for people to live. Housing starts, were basically are, indicators of builder sentiment in the real world, not just a feeling about it, but they're doing something. Housing starts had been kind of rolling along at levels we perhaps haven't seen in this country in decades. That tapped the brakes in June. The number of housing starts went down, somewhat surprising. What's going on? What do you make of the marketplace right now?
Totally. Look, I think the weakness in housing starts in June had everything to do with multifamily construction. The pace of building multifamily units, apartments has slowed. It had to. We have a record number of those multifamily units currently under construction, and rent growth has already cooled substantially. And so it doesn't make sense for builders to continue building apartments. At least for them financially, it's not gonna work out. If you have a bunch of units, vacant units on the market, and you're still building more, and rent growth is coming down to in some places even below pre-pandemic level. And so it has, in my opinion, it had a lot to do with the slowdown in multifamily buildings. In fact, that's what the census numbers show. And but I don't think builders are throwing in the towel. I think builders are smart. I mean, you look at builder sentiment is still increasing. You look at the stock of some of these publicly traded residential construction builders. Man, it's unbelievable. They're doing great. And why are they doing so great? They're doing so great because, the demand for housing still exceeds supply. You have existing homeowners that have pulled back tremendously, that are choosing not to sell. Right? We've talked about this on the podcast. They're sitting on low interest rates, low mortgage rates. They have very little incentive to trade a 3% mortgage rate for 7%. It's just,
if you could get 7% at this point, most places around the country, those numbers are much bigger than that.
Exactly. And so that's part of the situation. So builders now have a larger share of the housing market. And so, they can be there to absorb all of this demand. We have the largest generation, millennials, trying to buy a home. Right? They've come of age. They want to buy a home. They want to start families, and builders are here to kind of pick up the slack, and that's great. And so you're seeing the uptick in single family permits that have been climbing since January, from 748,000 to 922,000. By the way, this is a seasonally annual adjusted rate, and they rose again in June by 2.2% in June. So the builders are pivoting to where demand is at, and the demand is for single family units.
And you and I have talked about this before, and I'll make a point, and then you can close us out here. The size of the American home is changing. The needs of the American home buyer are changing. And you're of strong opinion that more smaller homes are, what is needed. And certainly, with the lives that some people choose to live, in particular, millennials. You haven't said that. So if I'm getting this wrong, you can tell me that I'm wrong. But what I've inferred from what you have said is that, that perhaps millennials want a simpler form of life. So that would mean they don't want to be cutting lawns. They don't want to be, caring necessarily for their properties. They would prefer to live in some community where that's all taken care of for them so that they can do what they need to do.
Yeah, but I mean, part of it is not just, first of all, I don't think it's just an opinion thing. It's what is selling right now. What's selling right now is, new construction buyers are basically buying townhomes in communities with amenities. They like the amenities. They also climate conscious. They don't want a big footprint, right? To leave a big footprint. They want to, they're climate conscious. They want smart home capabilities. They want, you look at homes today, it's not about the rooms anymore. It's not about having 4 or 5 bedrooms anymore. It's really about having space that actually works for your family. You look at these open spaces, they're beautiful. They let more light in so you don't have to turn on the light all the time, right? And so that's what's, they're taller, slimmer, sleeker, units that are for, in communities with gyms and swimming pools and all that stuff. And it's a beautiful thing to see. And I think we need more of that. Also space has gotten very expensive, right? It's very costly. And so if there's a way land has gotten very costly. So if there's a way to continue building, right? And to make housing more affordable, if you look at the data, when the U.S. economy, when the housing market slowed last year, competition for more affordable, smaller homes remained very stiff, right? So like all the big units sat out there, but people went towards the more affordable, smaller units. And so that's still part of the story. And builders are responding to that by basically building exactly what people want and need in today's challenging, I would say, housing market.
I appreciate those thoughts. For Orphe Divounguy, this has been Chris Krug. Subscribe to Everyday Economics and dozens of other quality podcasts at americastalking.com.